Hello, good morning everyone, and welcome to this webinar session where we'll be discussing understanding Forex trading. Forex trading is a very popular form of trading, and everybody's heard about Forex trading or knows somebody who is into Forex trading, but it's important to understand what Forex trading is all about, how you can get involved in it, and of course, you also have opportunity also to ask as many questions as you want during this session regarding Forex trading. So at least you can get a very good understanding about Forex trading before you jump into it. So if you have any questions, comments, do click the hand button on your control panel or send your questions or comments through the question box. Okay, so without much further ado, we'll kick off and discuss what Forex trading is all about. But before we do that, I'm just going to introduce myself for those who don't know who I am and why I'm talking to you. My name is Dr. Aderemi Banjoko. I am a private trader and investor in the financial markets with over 18 years experience. So I've been doing this for well over 18 years, trading and investing in the financial markets. And apart from trading and investing my own money in the financial markets for all these years, I also conduct trading and investing seminars and workshops in the UK, in the USA, Nigeria, Rwanda, and Ghana. And I'm also a guest lecturer at the CAS Business School in London, where I teach undergraduates and MSc students on alternative investment management. So basically, I'll be talking to you about my vast experience in the financial markets and trading the financial markets. Apart from being a director and co-founder for the NextGenFLX Limited, I'm also a director and co-founder of the DKB Markets Limited Company, which is a global online brokerage company where we partner with industry professional traders and platform providers who operate in London, Europe, and Australia. So we do own our own trading platform and give clients and people the access to trade the global financial markets. So that's just to give you a background of who I am and why I'm speaking to you on this, because obviously it's very important you understand who is speaking to you and what knowledge I have about Forex trading. So at least you know what I'm talking about. Okay. So Forex trading. What is Forex trading all about? And what is Forex trading? But before we start that, it's very important you understand the difference between trading and investing. Trading is significantly different from investing, and that's one thing most people tend to confuse. They tend to confuse trading and investing. So trading is significantly different from investing. Trading is short term. So with trading, you're looking to make profits in the market, within a couple of seconds, couple of minutes, couple of hours, or sometimes a couple of weeks. But trading is short term, whereas investing is long term. So when you're thinking like an investor, you're looking to gain profits or look for profit targets that will take you probably 3 to 5 to 10 years time. So investing is long term, trading is short term. It's very important to understand that. So if you want to get in and out of the market, within a couple of seconds, within a couple of hours, or a couple of days, or weeks, then you're trading. Once you say, okay, you want to invest in the market and you're not worried what the market does for the next 3 to 5 years, then you're investing. So it's important to know there's a difference between trading and investing. And I also like this quote from Warren Buffett. Warren Buffett is a well-known investor. I think he's the third richest man in the world. And he says, risk comes from not knowing what you're doing. because I'm sure everybody has heard about people losing money trading the Forex market or trading in general or investing in general. And everyone has heard about horror stories about people losing money. And that's why, there's a very good quote from Warren Buffett where he says, risk comes from not knowing what you are doing. And that's why most people get into trouble in the markets, because they don't understand the markets, they don't understand what they're doing, they don't know what they're doing, and then surprise, surprise, they lose a lot of money trading the Forex market. So risk comes from not knowing what you're doing, and that's why it's important. You need to understand what Forex trading is all about before you get into it. The other thing you need to also understand is the financial markets. What is this thing so-called the financial markets? Now, the financial markets are composed of four major parts. There are four major components of the financial market. So you have the fixed income securities market. You also have the stock market. You then have the currency market or the Forex market, and then you have the commodities market. These four markets comprise what we call the financial markets. So financial markets is when you talk to someone like me and you say, I'm trading the financial markets, I'll be wondering which of the financial markets are you trading? So are you trading the fixed income securities market? Are you trading the stock market, the currency market, or the commodities market? So those are the four components of the financial markets. Now, the fixed income securities market is where you're looking at things like bonds and treasury bills. So fixed income is bonds and treasury bills, and that's something you can start to think about too, bonds and treasury bills. So that's where you call the fixed income securities market. Then, of course, the stock market is where you're looking at stocks and shares on the bond market. And we've actually talked in the past about the fixed income securities and the stock market. And if you missed the webinars previously when we talked about the fixed income securities market and the stock market, you can go to our website, which is NextGenFLX.com. So at the NextGenFLX.com website, if you go to the events and seminars section, so just click there, the events and seminars section. So under that section, you can then watch the recordings of the previous webinars. You can watch the recordings of the previous webinars. So you can see that's the recording there on stocks and shares that you can watch there on the website. And also if you scroll down, you can see the recording there on bonds and treasury bills. So like I say, if you missed the previous webinars where we discussed the fixed income securities market, bonds and treasury bills, and the stock market, you can go to our website under the events and seminar section and watch the previous recordings on fixed income securities market and the stock market to catch up on that. So coming back to the presentation, so like I said, we've got these four markets: the fixed income securities market, the stock market, the currency market, which we're going to be talking about today. So we'll be discussing the currency market today, and then you also have the commodities market. And that's what comprises what we know as the financial markets. The other thing you need to understand when you're trading or when you're thinking about trading the Forex market, you need to understand what we talk about investment risk. It's very important you understand what is investment risk and how you can apply that understanding to you trading the Forex market. Now, the easy way to understand investment risk or risk is what are your chances of losing money. So not your chances of making money, what are your chances of losing money? So if you invest in something that has what do we call low risk, it means that thing has a low chance of you losing money. So that's the way to understand investment risk. So investment risk just means what are your chances of losing money. So like I said, if something is classified as low risk, it means there's a very low chance of you losing money. And the best market for that, where it's low risk, is the fixed income securities market. That's when you're looking at bonds and treasury bills. So if you buy bonds and treasury bills, your risk of losing money is very little to none, very little to no risk of losing money when you buy bonds and treasury bills, which is the fixed income securities market. So it's classified as low risk because there's a very low chance of you losing money. And the returns you can get per year with this low risk instruments is about 9.48% to 13.5% a year. That's the return you can get on your money. So that's low risk. Now, when we come to medium risk, that means there's some medium chance of you losing money. And the best market for medium risk is the long-term investment in the stock market. And the key word there is the long-term investment. So if you invest in the stock market, maybe over 3 to 5 years, there's some risk involved. You might lose some money because it's medium risk, but it's not a high risk. And you can see the stock market last year returned about 41% return last year in the stock market. And finally, you have high risk. And high risk means exactly that. High risk means you have a high chance of losing money. And that's where trading the Forex market or commodities markets come in. It is high risk. So trading the Forex market is a high risk investment. And high risk means there's a high chance of you losing money. So although you can get about 100% return a year, but you need to understand you could also lose money. And there's a very high risk of you losing money. So it's very important to understand your risk appetite, or what sort of risk appetite you have for the money you want to invest. So if you have some money to invest and you don't want to lose it, and you're scared of losing money, then you'll have a low risk appetite, and the best market you should go for is a fixed income securities market. So if you have some money and you want to take some risk, but not a lot, then you can invest long-term in the stock market. So if you have some money and you want to invest, well, you have a high risk appetite, you don't mind losing money, you have a high risk appetite like myself, where you don't mind if you lose the money, then you can trade the Forex market. So basically, if you want to trade the Forex market, you have to have a high risk appetite. You need to be prepared to lose money. And if you're not prepared to lose money, then you should not be trading the Forex market because it is high risk. So again, although the returns are high, the risks are also high. And if you're not prepared for that, you're not prepared to take high risk, you're not prepared to risk your money and lose money, then you should not be trading the Forex market. You should only trade the Forex market if you're prepared to lose money and you have a high risk appetite. So that's very important to understand investment risk, and to understand trading the Forex market is a high risk investment. So we're just going to discuss some of the basics of trading. Trading is actually quite good. Trading can offer you an opportunity to create another stream of income, with a good cash flow, once you have developed your mindset sufficiently and learn the rules of trading, because there are rules to trading. And if you don't understand the rules to trading, or you don't apply the rules to trading, you will not be able to make money as a trader trading the Forex market. So it's very important to develop your mindset and learn the rules of trading, which I'll discuss with you shortly. So to become a successful trader in the financial markets, you must possess what we call the 3 M's. If you apply the 3Ms to every single trade you place as a Forex trader, you're guaranteed to be a successful trader. I'll repeat that. If you apply the 3Ms to every single trade you place as a trader, as a Forex trader, you are guaranteed to be a successful trader. If you miss 1M out of the 3Ms, if you miss 1M out, you are guaranteed to lose as a trader, or you're guaranteed not to be successful as a trader. So it's quite straightforward like that if you're thinking about Forex trading. If you apply the 3Ms, you're going to be fine. If you don't, you're not going to be fine. So it's actually as straightforward and simple as that. So what are the 3Ms? So these are the 3Ms. So a successful trader, especially if you're a Forex trader, a successful trader applies the 3Ms. And the 3Ms are the mind, money management, and method. So it's mind, money management, and method. These are the 3Ms you need to apply for you to become a successful Forex trader. Now, mind is, the proper term for mind is what we call trading psychology. So basically, a disciplined mind is an absolute requirement for successful trading. And when we talk about a disciplined mind, is that you cannot afford to be emotional when you become to trading. You can't afford to be indisciplined. You have to be disciplined with your time, disciplined with your plan. You can't let emotions get involved. The most important emotions that affect traders are the emotions of greed and fear. So fear and greed are the two biggest emotions that can affect your mind and your trading. Because if you're greedy, you will take undue risks and lose all your money. And if you're fearful and you're scared, you'll be so scared to place a trade. And of course, you can't be successful if you don't place trades. So you find fear and greed are the two biggest emotions that hamper people who are traders. And in fact, the most important M to becoming a successful trader is your mind. In fact, 90% of your success as your trader is down to your mind and how you can control your emotions and be disciplined. The second M, and the second most important M, is money management. How do you manage the risk? Because like we said earlier, trading the Forex market is high risk. But you can learn how to manage this risk. And this is where money management comes in. So this is possibly the most important factor in trading, because the first goal of money management is survival. You need to survive to trade the next day. So you need to avoid risk that can put you out of business. So the second goal is to earn a steady return, and the third is to improve on the second. But the first goal is for you to not lose all your money in one day or all your money in one trade. You need to know how to manage your risks, how to only risk a small percentage of your capital per trade, and how to manage that risk. And that's a crucial part of trading. Money management is a whole topic in itself where I could spend 2 hours discussing to you the details about money management. But it's just to understand that money management is a crucial part of trading, how you manage your risk, how you manage how much you risk per trade, and so that you don't get lose all your money on one day in one trade. And the final M is the method. You must have a plan. There must be a plan or a methodology, and your trading shouldn't be based on tips, hunches, visions, or dreams. So it's not how you feel. You don't trade saying based on how you feel, or I feel the market is going to go up, or I feel the market is going to go down, or I went to bed and I had a dream that this is what's going to happen in the market, or I had a vision, or a friend told me this, a friend said, oh, this is what's going to happen in the market, and gave you a tip. No, you shouldn't do any of that. As a trader, you should have a method. You should have a plan of how you trade on a daily basis, and that's crucial. You should have an objective plan of you're going to that every day I'm going to do A, B, C in the market, and it should be clear and concise, and you have to stick to it. So these are the three big M's that you need in order for you to become a successful trader, and all this can be taught and it can be learned for you to become a successful trader. Now, what are the advantages of FX trading or Forex trading? It's a good thing to do because it's a very diverse market. Because when you're trading the currency market, you're trading the currencies of most of the major currencies. So you're trading the currency of Switzerland, of the Eurozone, of America, of UK, Australia, Canada. So it's a very diverse market, and diversification gives you a lot of choices. It's also a global market. So, you know, those who are in Nigeria can be trading the markets in Japan. People in Japan can be trading the market currencies in Europe. People in Europe can be trading currencies in America. It's a truly global market. And it's a 24-hour market. So the currency market or the Forex market opens on Sunday night and is open throughout to Friday night. So from Sunday night to Friday night, it doesn't close. It's a 24-hour market, so you can trade 24 hours a day. You can also trade it electronically, so you can trade it on your laptop, on your app, so you don't have to be sat in one place. So regardless of where you are in the world, if you're traveling, wherever you are, you can trade via your laptop or via an app on your phone. There's also good liquidity trading the FX market. Liquidity just means it's easy to get in and out of the market. So when you place your trade as a Forex trader, your trade is taken within seconds, and when you want to get out of the market and take your profit, it can also happen within seconds. And that's what liquidity means. It just means it's very easy to get in and out of the market. It's also traded on leverage. So leverage just helps enhance your profits. Of course, it can also enhance your losses too. And it's a very simple market to trade, believe it or not. Trading the currency market or the Forex market is a very simple market to trade. And it's also a good technical market. A good technical market just means that you can make your decisions based on looking at the chart of the currency you're trading or the Forex market you're trading, which is basically what's called technical analysis. So technical analysis just means you looking at the chart of the market you want to trade and basing your decisions on where you're going to buy or sell, just basing it on what you see on the chart. That's what technical analysis is. And the Forex market is a very good market to trade based on technical analysis. And again, this is something that can be taught, how you can read the charts, how you can read all this, what you're seeing on this chart. You can be taught on how to read them, how to analyze it, and how to make decisions based on the chart. Because if you understand how to read charts, it really significantly improves your success as a Forex trader. So technical analysis is very important as a trader, especially if you're trading the Forex market, which is a very good market to trade using technical analysis, where you can just make decisions on where to buy and sell based on what you see on the chart. So I'll just give you a brief background to the FX market or the Forex market. What you need to realize with the FX market is that there is no central exchange for the FX market. Like in Nigeria, we have the Nigerian Stock Exchange. In the UK, you have the London Stock Exchange. In America, you have the American Stock Exchange. In Ghana, you have the Ghanaian Stock Exchange. So every country has a stock exchange where the stocks and shares, the fixed income, and sometimes the commodities are placed on that stock exchange. But with the Forex market or the FX market, there is no central exchange. It basically just functions through a global network of countries, banks, corporations, and individuals trading one currency for another. So basically, there is no one central exchange for the FX market. So that's again, so there's no one that can control this market, there's no one that can rig the market because there's no central exchange. The prices of the currencies and the markets is determined just by the global markets and people trading with one country or one corporation to another. So that's the beauty about the FX market. Now, the FX market was initially developed to facilitate trade between countries. So that's originally what the Forex market was meant to do. It was just to facilitate trade between countries. So if an American with the US dollar wanted to buy cars in Japan where they use yen, and so Japan using yen, America using dollar, and they want to trade between themselves, then of course this is where the Forex market came, to facilitate them trading with each other using different currencies. But today, a large part of the FX market is traded largely on speculation, which is what we do as FX traders or Forex traders. We're just speculating on whether the market is going to go up or go down, and also arbitrage and professional dealing. So that's always a good thing to remember, that, you know, as an FX trader, you're mainly just speculating on the market. So you trade based on speculation. So a bit more on the foreign exchange trading or FX trading. The beauty again about the foreign exchange market is that it's the largest and the most liquid of the world's financial markets. You have more than $3 trillion traded a day in the FX market. That is a lot. So $3 trillion is traded every day in the FX market. So that's why it's the largest of the financial markets and the most liquid of the financial markets, because of the amount of money traded every day in the markets. So due to all these reasons, this makes FX an important addition to a trader's portfolio. And that's why you find that most traders, they have, you know, FX in their portfolio as a trader. So in conclusion, you know, making money as, you know, as a Forex trader or trading in the Forex market, like I said earlier, you need to understand the market. You need to understand the 3 M's. You need to learn about how to apply the 3 M's, the mind, the money management, and the method. And then you also need to understand that, you know, learning how to read the charts of the market can also help you be a successful trader. And also remembering that, you know, it's very important that you understand mind. This is the most important M when it comes to being a successful trader, along with money management, knowing how to manage your risk. And like I say, all these things can be learned. You can learn how to do them. Okay, so remember, you can always join us on social media and also ask questions and interact with us on social media. This next gen was set up to just assist you and educate people on how to be successful in the financial markets. So feel free to communicate with us via either email at info@nextgenflx.com. Of course, on our website, we have previous recordings of the webinar session, and this webinar session too will also be posted on the website. So you can also watch that on the website in the next couple of days when we post it on the website. It will also be on Facebook. So you can follow us on Facebook, Instagram, Snapchat, Twitter, YouTube, and you can see it's all the same handle at NextGenFLX. So all our social media handles are the same: NextGenFLX, Facebook, Instagram, Snapchat, Twitter, YouTube, or you can also email us for further information. Okay, any questions? If you have any questions, do click the hand button on your control panel, or send your questions or comments through the question box.